Hello and welcome. My name's Oliver Rolfe. I'm CEO and founder of Spartan International Executive Search. One of the topics we've been looking at recently, and the question we are being asked constantly and is in the press on a number of different occasions, it's how are independent research firms impacted by MiFID II? Now there are many questions, queries and many thoughts around about independent research firms, and before MiFID II I think most of us all agreed and believed that MiFID II was going to be much better for research firms, and certainly those firms that were going to be of quality, more focused, either sectorial or regionally. However, this seems not to be the case. Now, there are a number of different reasons for this. One of the largest reasons, more than anything else, has been the payment of research. And within the first 3 months of the year, everyone knew that it was going to take a number of months and weeks to settle down. However, after the first quarter, most independent research firms probably received about half the amount of revenue that they were expecting to receive from either CSA checks or other payments. Now that is a particularly large amount. However, what looks like is going to happen, and speaking to a number of different CEOs and heads of, and this is not something which is happening throughout, but this is more of a generalized view, it seems that most firms, where they're expecting X figure, whatever it may be, to be paid within the first 12 months, what they're finding is due to payment delays from the buy side, this is, a 12-month figure looks like it's going to be for 18 months rather than 12 months. So let's, for example, say you're going to be paid £100,000 for your research to the buy side, and rather than this £100,000 being paid within a 12-month block or a 12-month period, at least for the first 12 months block or period, in fact, you're looking at more of an 18-month period. So purely on that basis, if you're looking at your fixed costs, there is a huge amount to take into consideration. Additionally, you're looking at an additional third in terms of time lag. So realistically, your 12 months revenues are already down 33% or 33.3% before even starting. And that's before you look at the overall costs. And hopefully the best independent research firms will look at their costs internally, will look at people internally, will have very open and honest conversations with their staff, with analysts, and obviously distribution as well. And hopefully, again, over the next 18 months, they'll take a short-term view, or maybe they will lower their own individual costs to have a greater focus within 2 years from now. Because I believe 2 years from now, once we have a slightly clearer idea, shall we say, with Brexit, and additionally once MiFID II is bedded in, and bearing in mind with MiFID II we haven't yet seen, for me, the real MiFID II, whilst the sell side in particular is taking been at great lengths to focus on their strategies and to do the most they possibly can do, what you've actually found is that MiFID II, or what MiFID II is all about, is the buy side. It's the transparency of payments for their investors. Now, whilst there have been some very large asset managers like the likes of Henderson and Tudor that have merged, there haven't been too many changes from the buy side as of yet. There's still a question whether the impact of research or the impact of the lack of research or the payment of research will affect all firms. It certainly will affect the firms at the bottom 50%, because therefore the costs that they possibly could incur are going to be much less than the top, and therefore they're not going to have the plethora of research that they had previously. Whether this does impact on active fund managers, we're yet to see. Again, this is something that's going to happen through time. So MiFID II at the moment is taking a pretty heavy toll on the firms that we were expecting to do much better, i.e. the independent research firms, and especially without primary at the moment, it's very difficult to survive. And then most firms out there are leveraging heavily on the primary business, whether this is pure investment banks or UK banks and brokers that are more corporate-led. For me, again, within these kind of spheres and fields, you will see consolidation over the next 2 or 3 years. I believe that most firms out there could partner with either UK houses, if you're in the UK, and Germany, and Spain, etc. And also if people look slightly further afield at different strategies. So this could be a UK bank working alongside a European bank, and then suddenly having a much larger region, but working together, maybe working as a unit, but still having independence in between one side and another, so that you'll keep your solidity within the firm. However, there is still a huge amount to come out in the future, especially over the next 24 months. For now, all we must do is look at our cost base, make sure we are as lean as possible, look at our strategy and make sure we're as focused as possible, and we are really focusing on our core strengths and added value both to the market and to all around us. And really where we can actually genuinely add some true value and therefore generate some true revenues. Apart from that, we must wait and see the buy side unfold and then react accordingly. For now, the independent research houses are certainly suffering much more than they expected to, and some of the highlights may be the likes of Redburn and Sanford Bernstein, who have been really some of the strongest research out there, or certainly the best quality out there in their sectors and regions. However, these do seem like two firms which are being probably hit a little bit harder than most, and actually I would also include Autonomous to that list. So if you take Autonomous, Redburn and Sanford Bernstein, these are firms of great quality, either with a fantastic focus on the UK-Europe side or within financials. And whilst these firms do produce great quality research at a particularly high level, the payment for this research has been significantly hit. And again, for me, until we get over the next 2-year hurdle, until the buy side sorts itself out, until MiFID II really beds itself down, I believe this is going to continue. So look out for consolidation over the next couple of years. There is a huge amount of positivity for firms out there, and whilst there's disruption both regulatory and structurally, I believe the more that this happens, the more opportunities there are in front of us, and it's for those leaders, CEOs and heads of business to really take charge, to really have a strong focus, and to either go for it or at least be somewhat sensible with the risks that they take, and progress where best possible for their firms. I hope this has been extremely useful to you. This is my view on the market currently when it comes to independent research firms within MiFID II. No doubt that's going to change throughout the weeks and months, but I hope you found this extremely interesting. I look forward to speaking to you soon. Take care. Thank you for watching. I hope you found this interesting and useful. Please don't forget to subscribe, like, and comment below with any questions and queries you may have. And remember, be positive.